Hi, my name is Ollie Hochberg, and I'm the founder and principal trading coach of eTrading Academy. And I'd like to welcome you to our free series of short video courses on trading and investing. In this series, I'll try to introduce you to markets and trading, give you a glimpse into our methods and thought process, and explain you how we help people on their journey to become successful proactive investors. I hope you enjoy it. Welcome guys to video number 1, part of our 3-starter kit course that you've decided to watch, and we hope that you like this first video, and if you like, please fill up your details on the website and we'll be happy to send you the 7 of a course that are following up. Now let me just tell you a little bit about myself. My name is Ollie Hochberg. I've got almost over 27 years of experience working in financial markets, and I assumed several senior positions throughout my career. I've done some sales, I've done some trading, I've done some money management, and mostly between New York and London. I worked for several important financial institutions such as Daiwa Securities in America, Credit Lyonnais. I was made a partner at the famous Wall Street company Cantor Fitzgerald and its sister company BGC Partners. And that brings us to today, where I'm an independent proprietary trader as well as a portfolio manager. And I started heading up eTrading Academy, where I'm actively involved in mentoring and training teams of traders such as yourself. So let's jump into the course. I would like to talk about something that's very important, and I haven't seen many people really discussing this subject before. Most of the people out there using technical analysis. We've got two main ways of looking at markets, from a technical point of view and from a fundamental point of view. Now, I must start by stating this fact about me, that I am not a fundamental trader. I trade what I see based on price action and technical analysis only. I've tried many times in the past to trade off fundamental analysis and research, but I was never successful at it. Again, it doesn't mean fundamental analysis needs to be thrown into the bin, but it just means that it never really worked for me. So I will obviously take into consideration some fundamental data into my trading of every day. When it comes to be prepared when economics data or statistics are due, or also during company earning reports or even company news, this I will take into account. However, the bulk of my trading and methodology comes from technical analysis, and my trading plans and strategies are based upon it. Now, you might wonder, why am I being so adamant about technical analysis as opposed to fundamental analysis, and why most of the guys out there also pay most attention to technical analysis and charts? Well, it is necessary to first define what technical analysis is and discuss the philosophical premises on which it is based upon, in order to have a clear understanding of what it claims to achieve. Now, in a nutshell, technical analysis is the study of market price action and volume, primarily through the use of charts, for the purpose of forecasting future price trend. At the end of the day, both approaches, fundamental and technical analysis, attempt to solve the same problem, that is, to find out the direction prices are likely to move, and they just approach the problem from different directions. Fundamental analysis studies the cause of the market movement, while technical analysis studies the effect. What is fundamental analysis? It's really using fundamental data, supply, demand, all sorts of economics, statistics that we might have, which will help us to come up with our decision to buy or sell any financial instrument. So what is the rationale behind technical analysis? There are 3 strong premises that explain why technical traders like myself use almost exclusively technical analysis, and without strongly believing into every single one of them, technical analysis would not be able to stand on its feet, nor it would make any sense. So let's try to review these 3 premises one by one. The first one, the first statement is the core of it. The price discounts everything. I believe that anything that can possibly affect the price fundamentally or psychologically is actually reflected in the current price of that market. Price action is all that it's required. It reflects shift in supply and demand. If demand exceeds supply, price should rise, and vice versa. This action is the basis of all economic and fundamental forecasting. So in reality, you understand that technical analysis is indirectly studying fundamental, i.e. the economic fundamentals are the drivers of a bull or bear market, but the charts do not in themselves cause markets to move up or down. They simply reflect the bullish or bearish psychology of the market. So we do not really concern ourselves about the why, but more pragmatically we look at the price and what the market is trying to tell us right now. What's the price action? We do not attempt to outsmart or outguess it. We simply study price charts and let the market tell us which way it's most likely to go. Based on our technical analysis, we'll find out which way it is most likely to go. So the market is ultimately stronger than all of us, and he will go wherever he wants to go. One very important piece of advice: don't try to fight the market. Don't fight it, but instead embrace it. And that leads us into our second important premises, that the trend is ultimately our best friend.
In our next video, we will continue with the basic tenets of trading, and we'll review the second and third premise of technical analysis. We hope to see you there.